It's inflation print day in the US. Plenty for us to get our teeth stuck into. What are the key aspects which we'll be looking out for? Stay tuned to find out more. Two quick points before we get started. Quick recap on the markets in the last 24 hours. It was actually a positive day for the equity market, and this was led by the US in later trading hours. We saw bond yields which were relatively unchanged on the day. We saw a marginal moderation of yields, 10-year US Treasury down 5 basis points, which is a positive return for that asset class. FX markets relatively unchanged, but we did see the oil price moderate. We saw OPEC revise their expected demand for 24 and 25 down, just given some of the slowdown which we're seeing in key regions such as China. The second aspect to bring to life is just a health check on the UK. Kevin talked yesterday about the health of the labour market, and reports this morning demonstrated that the UK economy essentially flatlined in the month of July, so zero growth was registered. So we had the service side of the economy which was still growing, but the manufacturing and construction areas were weighing down, so flatlined in terms of the expansion in which we saw. So there's two important updates, but as we look into the afternoon, we're going to get an update on US inflation. Now we'll get the headline print, which the media will focus on heavily, but essentially we'll be looking in more detail at the core reading, and this is the reading which the Federal Reserve paid most attention to. In the first quarter of this year, we saw inflation actually rise. It peaked in the first quarter at a level of 5.4% on a 3-month annualized basis. And actually what we've seen is this nosedive ever since. We're above the 2% level, but around 2.2% at this point in time. We need to see inflation month over month on a core basis average around 0.2%, and that's exactly what we've seen through the second quarter. Why? Because that will help us get towards that 2% target. And that's what the market's expecting to see in the prints today, a reading of around 0.2% on a monthly basis. The market is now erring on the view that we'll see only one interest rate cut later in this month from the US, and an interest rate cut of 0.25%. If we think earlier in the quarter, they were discussing and debating whether we were going to see two at this point in time. But this will be the starting gun on a series of interest rate cuts which we'll see come through. So markets currently expecting to see interest rates around 3% from current levels of 5.5% 1 year from now. And this will be the level in which we'll sit at for the next number of years. And that's the expectation of markets as of this morning. So a lot of information and data for us to get our teeth stuck into this afternoon, and we look forward to bringing this to life for you here on Morning Markets. Thank you for watching.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.